What's happening, friends? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. In today's video, I'll show you 3 places that you can still earn good yields on crypto blue chips. Bitcoin and cryptocurrency are currently in a bear market. With that, many DeFi yields have dried up, but nevertheless, there are still opportunities to earn good yields on high-quality assets. In today's video, I'll go through some of those opportunities. And although I'll talk about several places that you can earn DeFi yields in this video, you should definitely still do your own research before investing in any of the things I talk about. And this video can be an important part of that research. Awesome, now let's get into the video. The first place that you can still earn yields even during a bear market is a place called Ribbon Finance. Ribbon Finance is an application on the Ethereum blockchain, and what Ribbon Finance does is it uses a strategy called covered calls to earn pretty good yields on blue chip assets like Ethereum, Bitcoin, Solana, and AVAX. Covered calls, if you're not familiar, is a form of option, and the way that covered calls work is imagine that you thought that Ethereum was likely to stay around the current price, which is around $1,700. And imagine that you thought it'll probably stay within $500 of that price, might go a bit up, might go a bit down. And then someone else thinks that Ethereum is going to go over $3,000 next month. Well, you could, in theory, create a contract with that person who thinks that Ethereum is going to $3,000, where they pay you a small amount now, and in exchange, you agree that you'll sell them Ethereum at $2,500 next month if they want to buy it. And so if Ethereum's below $2,500, they don't have to execute the contract and buy from you. But if it goes above $2,500 to say $3,000 like they think it will, they have the right to buy that Ethereum at a discount. And so that sort of contract is known as a call option. And if you're selling a call option, then what you're doing is you're agreeing to sell an asset at some price in the future if the person you're selling it to decides they want to purchase it. A covered call option is when you sell that contract and then you also hold the asset that you're promising to sell. So in this case, you would buy 1 Ethereum and then offer to sell 1 Ethereum at a certain price in the future. And the other person you're offering to sell to pays you a small amount now. So if Ethereum doesn't go to the price that you promised to sell it at, then you just keep the fee. And if it does go to the price you promised to sell at, you sell that Ethereum you have at an increased price, and you also keep the fee. And this is a pretty good way to earn yield on assets like this. And this is something that exists in the normal stock market as well. So you can see the APY on Ethereum on Ribbon right now is around 20%. On Bitcoin, it's around 18%. On staked ETH, it's around 36%. So there's some pretty solid APYs on good quality assets here. And this is, of course, not without risk. And if you go to Ribbon Finance and click on these things, then they outline some of the risks here, which I'd recommend you absolutely look at all these here, and props to this app for being so transparent about the risk. And they do also take a annualized management fee and performance fee on the funds. However, this is a pretty solid way to continue to earn yields even during a bear market. That is Ribbon Finance. Second place that's still offering good yields even during the bear market is an application known as GMX. GMX is on both Arbitrum and Avalanche, and it's a decentralized perpetual exchange. So it allows trading of assets like Bitcoin, Ethereum, AVAX, and other top cryptocurrencies with leverage. And now, I'm not a big fan of leverage trading myself, certainly not in choppy market conditions, although I know some people do have luck with it. But you don't need to actually trade yourself to earn with GMX. You can provide liquidity on something known as GLP, and in exchange for that, you earn a proportion of the trading fees on the platform. So other people can leverage trade. You are the house in that case, and the house usually wins. And so what's in GLP? Well, on Arbitrum, GLP is 33% USDC, 28% ETH, 13% Bitcoin, 12% DAI, 7% USDT, and then the remainder is a combination of small assets, which are mostly DeFi blue chips and stablecoins. And then you can earn on Arbitrum 12.7% on that GLP. On Avalanche, if we switch to that network, then the GLP actually earns a higher rate It's currently earning 35% on Avalanche, and the makeup on AVAX is 38% USDC, 21% Bitcoin, 15% ETH, 14% AVAX, and 12% USDC. So pretty high percentage stablecoins, then a combo of ETH, AVAX, and Bitcoin for about half. And again, that's a pretty good rate for those sorts of assets. And GLP is a pretty well-used, well-tested protocol at this point, but of course, nothing is without risk. And for GMX in particular, one of the risks is, well, I said before, the house always wins, but there are times where the house loses. So if there's a situation where traders win really big by either going heavily long on an asset or heavily short on an asset, then in that case, the GLP holders could lose some value in their tokens. And of course, the value of GLP is contingent on the value of AVAX, ETH, and Bitcoin, or if you're on Arbitrum, ETH and Bitcoin. And if you do decide to use GMX, I do have a referral code for this. I have no affiliation. Anyone can make a referral code, but I did make one. Dynamo is my referral code. You'll get a 5% rebate on fees if you use it. And I'll include a link that has that referral code embedded in the description of this video. And that code works on both Arbitrum and Avalanche. Final place that you can earn yield during a bear market, and there are others, but these are the 3 top ones that I found, is Curve. And you're probably familiar with Curve already, but Curve has a lot of pools that just include stablecoins. I don't like stablecoin farming, but you can use it for different versions of ETH, different versions of BTC, or my favorite, the Tri Crypto pool. The Tri Crypto pool is usually a stablecoin, BTC, and ETH. On Ethereum, it ranges from around 3.7% up to 8%. Or if you go to other networks on Arbitrum, it ranges from 1.4% to, actually it's flat on Arbitrum. It's around between 7 and 8%. On AVAX, it is around the same as Arbitrum, slightly less. And then on Phantom, it's actually over 8% right now. So not bad. And if you want to use it on Ethereum, although you have to add a lot of V-curve to get that maximum rate yourself, you can also go over to Convex and earn around 7.7% over on the Tri Crypto pool on Convex Finance. So in general, you can earn between 7 to 8% on Curve on these various different networks, which is not too bad, considering stablecoins, BTC, and ETH are probably the assets that most people want to hold at this point in the market cycle. And those are the 3 places that I'm currently looking at for yield. I'm not so focused on the smaller projects right now, just because if the market does take another leg down, then smaller alts are going to get absolutely hammered. Somewhat interested in Chainlink, like I've mentioned recently, but that would be a topic for another video. That's all I got for today. Let me know what strategies you're using down in the comments. And until next time, this is Dynamo DeFi.